A lot of traders fail because they are unable to identify market structure. They're unable to identify where's the swing high, where's the swing low, when is the market consolidating, when do I avoid the market, right? And that's where a lot of traders fail because they don't know what direction the market is going. A lot of people tend to overcomplicate market structure, where in reality, market structure is actually extremely simple. So I am here to basically make market structure as simple as possible, break it down to the most simple definition as possible so you can understand it and apply it for yourself. So without further ado, let's get into the video. Market structure. What is market structure? Well, first and foremost, market structure is made up of two main things, right? You have your uptrend and you have a downtrend. An uptrend will only consist of higher highs and higher lows. So for example, in a trending market, you will have a market make a high, a higher low, because this low is higher than its previous low, right? And then a higher high, right? So uptrends only have higher highs and higher lows. That's it. That's it. Nothing else. Only higher highs and higher lows. Downtrends, we go down. We only have lows, right? Lower highs, because why? This high is lower than this previous high, and then a lower low. Why? Because this low is lower than this low. So downtrends only have lower lows and lower highs. I need y'all to understand that. That's all it can have. It's just lower lows, lower highs. Y'all got it? Now, there's something super important that people don't understand, and this is where people get messed up. This is where people get confused. And I need y'all to really understand and write this part down. You cannot have a higher low without a higher high. What does that mean? So we had this uptrend, right? I'm gonna redraw it for you. When we're on the uptrend, right, and price is making this movement, we have something called a pullback or a correction or a retracement, whatever you want to call it, right? The market moves in waves. It goes up, it goes down. A lot of people tend to label the pullback as the higher low before it becomes a higher low. What does that mean? Well, I just said you cannot have a higher low without a higher high. You'll see a lot of people mistakenly label this as a higher low, when in fact, this cannot be a higher low yet, right? Why? Because there's no higher high. This is a anticipated higher low. We anticipate this point to maybe be a higher low, but we cannot call this a higher low yet. We have to wait for price to create that new higher high, right? So because price made this higher high, we can now say, okay, we have now established a official higher low, right? Price has to break structure. Price has to break previous structure and create a new high before we can officially call this a higher low. But why? Why do we have to do this? Why do we have to wait for the higher highs to be made? So glad you asked. It's a great question. I'm actually about to answer that question real quick. I just need y'all to understand that it's the same thing for a downtrend as well. Same thing. You cannot have a lower high without a lower low. Same thing, right? Price, you cannot call this a lower high yet. We cannot say this is a lower high yet. Why? We need price to come down and make this lower low. The moment price breaks structure and we close below this previous low, we can now officially say this is our new lower high. Why? Because, like I said, we just came and broke previous structure to the downside, closing below the structure, making the lower low, and that establishes the official lower high. So again, why do we do this? Why is this so important to wait for the next higher high or the next lower low before we can establish that? It's a great question. It brings me to my next segment. So the reason we have to wait for price to make a new lower low or a new higher high is because we have something called external structure and internal structure. So how can we tell between the two different types of structure? So basically, when price is trending in an uptrend, right, and you have your swing low and you have your swing high. So here is our swing low and here is our swing high, and I'm actually gonna label it to make it even simpler for y'all. So this is the swing high and this is the swing low. Okay, so I just labeled it so it's even more clear, right? Our higher high is our swing high and our higher low is our swing low. That will always be the case. This marks out external structure, right? Basically, the swing high, swing low. Simple definition, external structure. So what is internal structure? Well, internal structure is going to be everything within the swing high and swing low. So any price that fluctuates in between these levels is going to be swing high, swing low. So for example, so if I was to copy this structure over, right, basically anything that's happening within these swing highs and swing lows, right, that is internal structure. This is internal structure. So that's why you can't call this a higher low yet, because you don't really know where price is going to stop moving. We don't know yet until we actually break that next swing point, right? So anything between these points is considered internal structure. That is why you cannot have a higher low without a higher high, and you cannot have a lower high without a lower low. So once price decides to actually break above this swing high, that is when you can officially say, okay, we have a new higher high. I can say this is my new higher high, right? All right, so that means I now have a new higher low. Wait a minute, which one of these points is my higher low? How do I know where to put my low? Is it going to be this low? Is it going to be this low, this low? There's a lot of lows right here, right? It's confusing. So how do I know where's my swing low going to be? How do I define a swing low, and how do you define a swing high? Well, that's a great question. That's also bringing me into my next section, right? So before we can determine what's the next swing low and what's the next swing high, we first need to understand the official definition of a swing high and swing low. So in the most simple terms, I broke down the definition of a swing high, swing low. In my definition, a swing high is the highest point that causes the swing low, right? And a swing low is the lowest point that causes the swing high. Okay, so now that we have this definition, let's go back and try to apply this definition to what we're currently looking at. Okay, so right here we have our definition, right? We're trying to figure out what is a swing low. Well, according to this definition, it says that a swing low is the lowest point that causes that swing high. So let's go back into this structure point and let's try to find the lowest point that caused this swing high. So basically the lowest point that caused this specific break of structure right here. So let's go back. Okay, so we have this low, right? But this isn't the lowest point, right? It's a low, but this low isn't lower than this low. So okay, now I'm looking at this low, I'm looking back, and I don't see a low any lower than this. Okay, so since my definition of a swing low is the lowest point that caused a swing high, right? This was the structure, this is the lowest point, and now we have the swing high. Okay, since this is the lowest point, this must be my new swing low, right? And that is how you're able to decide where's the swing low and where's the swing high. So that was a pretty good example, but let's look at a downtrend. Is it the same concept? Well, let's see. So right here, we're looking at another example, but this time we're looking at a downtrend. So as you can see, we have a lower high, like this is our swing high right here, and we have our lower low, also known as our swing low, right? And so this is our external structure, right? Swing high, swing low, and the internal structure can do whatever it wants in here, right? It can do whatever it wants, and boom, until we finally break that swing low. Price came and we officially broke structure right here. So we can easily find our swing low, right? We can easily find that. Our swing low, as we know, is right here. But can you tell me, where is the swing high? Where do you think the swing high is, right? Is it this high? Is it this high? Is it this high, right? Let's go back to our definition of what is a swing low and what is a swing high, and let's try to figure it out. So, okay, the swing high is the highest point that caused the swing low. Okay, so we have our definition. So with the information, I want you to pause the video and mark out the swing high, and then unpause it and see if you were correct. So if you said that the swing high was right here, you are indeed correct. And the reason you are correct is because if you look back, right, price, if you go back, we see we had this high right here. And yeah, that is a, you know, it's a nice high, but this high is not the highest point that caused the swing low, right? Price started moving right here, and we saw that price actually got to this highest point, and nothing was higher than this point. So because this was the highest point price went to before breaking this last low, this has to be our new swing high. So if you got it, great job. If you don't, it's okay. We're gonna do a little bit more practice. So with the information we just gathered, I want to go back to trends for a second, right? So we talked about uptrends, we talked about downtrends. There's something else in the market that happens, right? This is when the market moves sideways. When the market is moving sideways, that is basically when price again is moving between these swing points, right? Price is doing some kind of sideways movement right here, right? So when price is moving sideways and it's not making a higher high or a higher low, we're just making internal structure. We're not making any breaks of structure at all. This is called consolidation, also known as a ranging market. We are ranging, right? We are ranging between these two swing points because we are failing to break a new swing high or a new swing low. When markets are ranging, you want to be cautious, right? You don't want to be caught trading this. The reason I say this is because sometimes you could be in an uptrend, right? We're obviously making higher highs, higher lows, higher highs, right? We're breaking structure. And then you might see some consolidation heading to the downside, and you may confuse the consolidation that you are now like in a downtrend when indeed that is not the case, right? You have to understand that within these swing points, you are still in the uptrend. Regardless of what is happening in here, you cannot let the ranging market fake you out and think you're going in that direction, right? You have to remember that, hey, I have a swing, I have a higher high, I have a higher low. Higher highs and higher lows only consist of what? Let's go back to our definition. Okay, higher high, higher lows only consist of uptrends. Okay, so because we only have a higher high and higher low, that means we are indeed in a what? We are in a uptrend. So do not let a consolidating market fake you out. In fact, I would try to avoid, if possible, consolidation. We do not like trading ranging markets. We want price to give us a clear direction that we are looking to go in the up direction, right? Do not let consolidation confuse you. So, okay, we have the uptrend, we have the downtrend, we understand consolidation. How do we know when the market is changing trends, right? So uptrend, downtrend, how do I know when my uptrend is ready to become a downtrend? If I'm in a trend and I know that an uptrend can only have higher highs and higher lows, I'm actually going to remove this for a second. Hope y'all wrote this down, right? But if an uptrend can only have higher highs and higher lows, then I expect my uptrend to do what? Make higher highs, potential higher low, and then official higher high. So I can say, okay, this is my new higher high, right? And this is my new higher low. Cool. So how do I know when this trend has changed? How do I know when this uptrend is over? Again, the definition, what is an uptrend? You can only have higher highs, higher lows. Okay, so if price decided to do something like this, what did price just do? Okay, so we broke a swing low. Let's also mark this again, right? So we just said that when you break a swing point, that is a change of structure, right? When you break swing points, the structure is changing. We just came and we just broke a swing low. We just broke the higher low. But hold on, we don't make lower lows in uptrends. You only make a lower low in a downtrend. So when the market breaks a higher low on the uptrend, right? That is when you are officially switched into a downtrend. Why? Because by definition, a downtrend has lower lows and lower highs, right? Uptrends cannot have lower lows. So at this point, you officially just witnessed a reversal, right? So this is officially a reversal in the market. Once you create a lower low, you will expect to see the new characteristics of a downtrend, right? So downtrends, we have what? We have lower lows, right? And lower highs. So at this point, we now have a lower high and lower low, and we are now switching to the downside. So the moment price decided to break structure right here, there was structure, right? We were on this uptrend. The moment this uptrend decides to break a low, that has officially switches into a downtrend. So now we understand reversal. So now that we have all this knowledge, right? We understand uptrends, we understand downtrends, we understand consolidation, we know how to find the swing high, the swing low, and we know how to identify a reversal. I want to actually challenge y'all, and let's go into the real market and apply it, right? So currently we are looking at USDJPY. USDJPY is one of my favorite pairs to trade, and I'm just going to show you basically how I look at market structure and how I'm able to identify everything. If we start right here, can you tell me what are we in right now? We're in an uptrend, a downtrend? What do you think? So this is probably pretty obvious. If you say uptrend, you are indeed correct. And the reason we're in the uptrend is because we are making what? Higher highs, right? And then higher lows. So we are making higher lows in this trend. But I have a question for you, right? So my question is, when in this movement, right, can you identify right here, just right here, can you identify where is the swing high and where is the swing low? Right here. Where's the swing high? Where's the swing low? To make it even clearer, I'm even gonna rewind it for you so you can see it for yourself. So right here, currently in the market, where is your swing high and where's your swing low? Where would you mark it? Go ahead. Okay, so I gave y'all some time. If you said that this is our swing high and this is our swing low, you are indeed correct, right? So if you wanted to say that this was a swing low, we know that this can't be a swing low. And why is that? Well, let's bring back out our definition of what is a swing high and what is a swing low. Okay, so we got a definition and we see that a swing low is the lowest point that causes a swing high. So if I look back in time at price, right? Previously, this was the low and this was the previous high. So if we look back at price, let's see what happened. So price, we had the swing high, we had the swing low, right? Price, we came down, right? All the way to this point, and then we broke this high, right? We broke structure. There was a break of structure right here. So we have a official break of structure. Okay, so since we broke structure, we know that this new high point is our swing high. By definition, a swing low is the lowest point that causes swing high. So let's look back. So right here, price, we came down, and this was the lowest point price went before breaking structure. So since this was the lowest point, this has to be our new swing low. Okay, cool. So let's keep going. Let's keep this going. So let's see if we can find the new swing high and new swing low. So I'm gonna let price play out. Boom. Okay, so we officially have a new break of structure, right? We have a new break of structure. So from here, let's go back and just kind of trace price a little bit. So we started here. This is the low, this is the high, right? We came down, right? Made some more price action, and then we officially broke this high. So here is my swing high. Where is my swing low? Where do I put my swing low? I want y'all to answer this for me. Give y'all a few seconds to figure it out. Where's the swing low? So we have two lows. We have a low here and we have a low here. Which one do I declare as the official swing low? Well, let's go back to the definition one more time. The swing low is the lowest point that caused the swing high. So if my swing low is the lowest point that caused the swing high, let's go back. Okay, so I'm going back in time. Okay, we made a low right here, but this is not the lowest low. So let's keep going. Okay, we made a low right here. Okay, so this is a pretty low low. Looking back, there is no other low that was created before we broke this high. So by definition, my new swing low has to be right here. So again, very, very simple, very straightforward. Identifying the swing low and swing high is not as hard as it seems to be. Now, something I need to also bring up that I forgot to bring up is super important, right? When you're looking at structure, you have to look at the candle bodies. What do I mean by that? So true prices only show where the candle bodies has closed, right? You have, on the candlestick, you have two things. You have the candle body, so that is where the color part is, right? From here to here. And you have the candle wicks. The wicks are basically these little sticks that hang from the candles, right? When you're looking at true price action, when you're looking for a breaker structure, you have to look at where the candle body has closed. So just as a note, right? You must look at the candle body closes. You must look at those candle body closures, right? So for example, if I'm trying to figure out where is my swing low at this point, we just said that this was a swing low, right? We just said it. So my question is, why are we saying that the swing low is at these bodies? Why are we not saying that the swing low is at these wicks right here? True price is shown by the candle bodies. The wicks is just where price tried to go but failed. So at one point, this candle opened up, and this candle was actually all the way down here, but buyers were super strong and they actually pushed this candle all the way back up here. So this wick is just a trail of where price previously was, right? But price officially truly closed up here. So this is where the candle has closed, right? In fact, if you really want to see where true price is, a quick easy tip is to switch from the candlestick chart to a line chart, and you can see right here that true price has stopped here. You don't see the trail right here, right? Price action stops right here, and that is where you need to be looking at breaks of structure, where price truly is, right? We don't look at where price try to go to, we look at where price is currently at. So that's why I have my swing low placed right here, because again, if I was to switch to a line chart, you will see that true price has stopped exactly right here, right? So that is why we must look at the candle body closes. So write that down. It's also very important. So we're gonna do a few more examples, and I'm actually going to rewind price again. Okay, so right here we have our trusty definitions, and we're just gonna keep going with this bar replay, and we're gonna keep seeing if we can find the next swing high, swing low. So we're gonna keep going. So right here, let's keep going, and then boom, price officially closed above this structure point. So right here, you can see we had an official break of structure right here, official break of structure. This body has closed above. Okay, so we know where a new swing high is. Before we do that, let's just mark out what price did. So this was the low, this was the high, and price, we came down here, right? And then we officially closed above. Okay, so this one's pretty easy, right? We only had one price fluctuation, so our swing high is gonna be up here. And the only low point we made was right here. So we're moving our swing low to this point. Boom. Okay, cool. Pretty easy. Let's keep going. Waiting on price to make a new structure, and boom, we officially made new structure up here, right? Okay, boom. So we officially made new structure up here, right? Let's look at what price did. So this was our low, this was our high price. We came down a little bit, and then we broke this next high. So again, there was only one point here, so we obviously know that this is our, first we know that the break of structure has happened here, and then we know that this was our swing high, and this was our swing low. Cool. All right, let's keep going. Price, we came down, came super low, and then what happened? So at this point, price is kind of moving sideways, right? We're failing to break the high and break the low. What is this called? Do we remember what this was called? So if you remember correctly, we defined that when the market is failing to make a new high and make a new low, we are now in a consolidating market. So consolidation, also known as a ranging market. Why? Because the price is ranging between these points, right? We are not breaking any swing highs, not breaking any swing lows. You want to be careful right here. You want to be careful right here. You don't want price to fake you out in this instance. You need to understand that we are still in a what? We are still in a uptrend. Why? Because we have a higher high and a higher low. What does that mean? Well, we just said that a uptrend can only have higher highs and higher lows by definition. So do not let consolidation confuse you. Your swing high is still a higher high, and your swing low is still a higher low. So we are still officially in an uptrend, okay? So let's not get confused here. Until price breaks this swing low, that is when we have the reversal. That's not happened yet. So we are still in an uptrend. So we're just gonna wait. I actually noticed something pretty important. I just missed it. But right here, remember how we said you must look at the candle body closes, right? Okay, so right here, and if you caught this, great job. Right here, as you can see, price, we closed the bodies right here, right? We closed right here. Price came down, and what happened? What happened? Oh, it was very slight, but the candle bodies did close above this level. You see, we do have a break of structure officially right here, right? We have a break of structure right here. So we finally broke structure, right? And how can you see this more clearly? Again, we can use our trick. We can jump to a line chart. You can see right here, clearly, this high was broken, right? You can see it clear as day. So let's go back to our candlesticks, right? Okay, boom. So since we know that we have broken structure, we know that our new high has been established, right? So we are gonna move our new high right here. Okay, how do we find our swing low? Where's our new swing low? So let's go back to price. We were here. This was the previous high, and then price did this. So we had a movement, we came down, right? We were fluctuating, we were ranging, and then we finally make a new high, new break of structure, right? Where is our lowest point? Remember the definition. Where is our lowest point that caused the swing high? So if I'm looking back, I see that this looks to be the lowest point. There is no point lower than this before the break of structure. So I have to say that this is my new swing low. So at this point, we pretty much understand it. We pretty much get it, right? So let's try to find an example of a reversal. Okay, so this is pretty cool. So right here, price, we broke structure, right? We had this new high that was formed, right? But before we do that, let's just mark out like what happened before. So again, this is the low, this is the high. We came down here, right? Came again, and then we broke above. So official breaker structure was here. We had a new established high. The lowest point before the swing low is right here. So we moved this up. Okay. Look at what happened just now. Price, we were making higher highs, higher lows, and then what happened? Oh, we just broke structure to the downside. We just had a bearish breaker structure. Why is it bearish? Well, we broke a higher low, but we were in the uptrend, right? Uptrends, they only are supposed to make higher highs, higher lows, right? But we just broke this low. We just came right here and we came and broke this low. So what is this now? By definition, we know that a uptrend can only have higher highs, higher lows. Okay, well, we just broke that, right? What did we just make? We just made a lower low. Oh, well, by definition, a lower low is a downtrend. Okay, so since we broke this low and made a lower low, by definition, we have just shifted to a downtrend. So we officially have a reversal. So we just had a reversal in the market. So at this point, we can expect price to do what? Come back to make lower highs and make even lower lows. So let's see what price decides to do at this point. So before we do that, I want to first establish where is our new swing low and swing high. So at this point, we do not have a higher low anymore. We now have a lower low. We broke that low. So right here, we obviously see that, okay, this is the new low, right? Obviously. But where is our new swing high? So what happened right here? Okay, so let's go back. Let's rewind. So price, again, we were here. Price, we dipped down a little bit. Right? We came up and made this high point, and then we broke structure. Okay, so by definition, the swing low is the lowest point that caused the swing high. So we know this is our new low. But our swing high, what is our new swing high? So again, this is gonna be our, not higher high, but it's gonna be a lower high. So our new swing high, let's see, well, price, we were here, we came down, we created this high, and then we dropped. We didn't make any more highs between this point. So this has to be our new swing high point, right? Okay, so we are now officially in the downtrend, and we are looking to see, you know, what's going on here. So we're waiting. Let's see what price wants to do. So, okay, we have this nice pullback. Is this a lower high yet? Can we count this as a lower high? If you said no, you were correct. Why? Because we have not made a new lower low. Remember, you cannot have a lower high without a lower low. So this is a anticipated lower high. We think this is going to be a lower high, but we can't call it a lower high yet until price has came and did what? Came and broke this low. So let's watch price and see what it wants to do. So, okay, let's see if we're gonna get a lower high right here. So we're watching price. Okay, nice big drop, and then, oh, hold on, we did not make a new low. So can I still count this as a lower high? No. Why? Because price never broke this low. Price has never came below this low. So because price has never came below this low, I cannot say this is my lower high because we never made a new lower low. So at this point, we are doing what? What's happening right now? At this point, we are officially ranging. We are in consolidation. Why? Because we failed to make a new low. We failed to make a new high. We are just ranging between these points. So until price breaks this swing low, or price breaks this swing high, we are in a range. So we are in this consolidating ranging market, right? I want to make a point. There is nothing wrong with trading a ranging market, okay? I just want y'all to be careful when it comes to trading a ranging market. I want y'all to be careful. Especially like, so for example, this is the daily time frame. The daily time frame is pretty slow. You can obviously scale into a 4-hour and see a whole entire different structure. You can trade this, right? I just need y'all to understand that like when you're trading in a ranging market, you just need to understand where the overall direction currently is, right? A lot of times people get confused with internal structure. They say, okay, well, internal structure, we're making higher highs, higher lows, higher highs to higher lows. We're in a uptrend, right? Yes, right now we are in an uptrend for internal structure, but if you truly look at external structure, you will understand that we are currently in a downtrend, and there are actually sellers waiting right here to take the market down. And as you can see, when price finally reached this point, what happened? The market tanked. The market tanked to the downside. So you need to understand where you are in the market, right? So if you're a smart trader, you understand that, hey, my swing high is up here, my swing low is down here. If I want to buy this market up, I can only buy it up to a certain point until the market's looking to come down. So I know that I have temporary buys right now, right? So that is fine. That is completely fine. As long as you understand that, hey, this is a bearish market, for sure, buy it up, right? There's nothing wrong with that. I just don't want y'all to get confused on where the true direction is actually going and you get stopped out. So that is my point for that. So yeah, that is my video on market structure. It is very simple, right? Once you break it down to the most simple definition, you see that people tend to overcomplicate it when in reality it is extremely simple, right? So I hope this was helpful. I hope this helps you with your trading. If you have any questions, please like leave them below. I'll be happy to answer them. Any concerns, like let me know. I hope you'll have an amazing, wonderful, blessed day. Good luck in the markets. Until next time, y'all. Bye.